Well, good afternoon, everyone. I want to welcome you again. We're going to go ahead and get started. We want to respect your time and we have tons of information to provide to you. And so, just a brief introduction for those of you who don't know me. My name is Royce Williams. I am a real estate agent here in the Tampa Bay area. I have over 13 years of experience working with real estate with clients who are looking to buy, sell, or invest in real estate. You are joining us today for our Lunch and Learn series. Is part of our summer homeownership educational series. And throughout the summer, we've been covering all different types of topics on different homeownership processes and different topics surrounding homeownership. Today, we have the pleasure of a presenter who I hold dear to me. He's one of my long-term friends. We met in college. Kenneth is my guy. He's super resourceful. He's a financial educator. He is with WealthWave Financial, and they are a huge financial institution here that provides abundance of financial services, and he'll be able to kind of talk to you all about that. But today he will be presenting on protecting your home with life insurance. Actually, when I purchased my first home, I definitely contacted Kenneth, and he was my guy who got me homeowners. Well, I wouldn't say homeowners insurance because it's different, but he got me in a life insurance policy that in the event that I passed away, my home would be protected, so my family wouldn't worry about paying a mortgage and things like that. I can't tell you enough how important that is. Unfortunately, I did actually have a client who passed away a year after purchasing her home. And so she actually was in a different state from her family. And so her family was left to kind of figure out what to do with her house. And so you don't want to put your loved ones in that situation in the event that you do pass away. You actually want it to be an asset for them. And so having a life insurance policy is incredibly responsible and definitely helpful for your family. And so Kenneth is going to tell us all about that and different options that you can have with the life insurance policy, because there's other things you can do with it, not just in the event that you pass away. And so without further ado, I will let Kenneth take over. Before we let Kenneth starts, if you have questions, feel free to put it in the chat. I don't know, Kenneth, do you want them to ask you as you go, or do you want to wait till afterwards for them to ask their questions?
For this opportunity, they can ask as we go because we kind of went over it before in the first session. I know this is kind of a follow-up to it because a lot of people had a lot of questions and it was more information. So they can ask as we go along. That's fine.
Okay, perfect. And we do have some new people on this call. So if you, what he's referring to is he also was a teacher for our budgeting class. So he gave us, he dropped a lot of gems. I actually got my account. I don't know if anyone on this account call got your accounts and have your high yield savings account set up. But if you haven't done that, you need to do that. But yeah, feel free to ask your questions. If you don't want to unmute yourselves, and let's say you're at work, you can feel free to put it in the chat and we'll answer them as we go. So without further ado, Kenneth, I will let you have the floor.
Thank you so much, Royce. I got to give it back to you. What you're doing with this Lunch and Learns is phenomenal. I've been walking around and I'm like a local celebrity. People have been catching me at the gym and stuff and saying, hey, man, I didn't get a chance to drop into the Lunch and Learn, but I got a chance to see the recording. So it's awesome that this information is being disseminated to the people. So that's the most important part. So what we're going to talk about today is how to protect your tend to be your biggest asset. Normally your home tend to be your biggest asset, and what's more important than protecting it. And the way we do that is with life insurance. I will say to piggyback on what you talked about with that client, I had a client that was a little bit older, a little seasoned, and she passed away a year after purchasing her home. She used the VA loan and everything, was able to put 0% down, and she ended up having a policy. And I'm gonna show you a little bit of the policy that I'm talking about. And she passed away, and she was able to, her daughter was able to receive those funds and was able to pay off the mortgage. And then her daughter got a free and clear house. So, and it was like her mom gave her one last gift before she before she was gone. And that's the power of us having those policies in place, because one of the little hidden secrets that no one talks about is the proceeds from life insurance is tax free. So you can end up passing on $500,000 or $1 million to your family members without having to pay, capital gain taxes or income taxes. So it's literally a great way to transfer some wealth tax free. I'm gonna say it again, tax free. All right. So that's the power of it. So nevertheless, let's just talk about a couple things. So it's a big debate and argument about, what's the best type of policies. I will tell you, there's only two types of policies. There's term and there's permanent. That's it. It's just two types. Now, the thing is, term is just one type of term, and it's a period of time. So it covers you for a period of time. The other one is permanent, and that's where you get the whole life, the index universal life, the variable life, and all those IULs and things of that nature you hear. That's just one type. It's a permanent policy, and what is made is permanent. It's in place for your rest of your life. And so the thing is, every policy have different nuance and things of that nature. If you do need to know, like, hey, which one's best, set up a consultation, set up an appointment. I could look at what you have. I could look at what you've been looking at, what proposals you receive, and say, hey, see, this one makes more sense or not. But just remember that every insurance have what we call a cost of insurance, meaning it's a cost to cover you, right? So if you do a permanent policy, regardless of what it is, whether you do an IUL, Index Universal Life, Universal Life, or any of that, it is a cost associated with it because it's a cost to insure you. And then traditionally, you overfund those type of policies where that additional money goes into an investment account. Um, that's a little bit deeper in the scope for this class. What we're talking about here in this Lunch and Learn is how to protect your primary asset. And one of the best ways we found to protect that asset and where it correlates with your mortgage, because most people either do a 15, 30-year mortgage, has been the Transamerica Trendsetter LB or Nationwide LB. But mainly, the main thing I want you to know is having a term policy with a living benefit. All right. So if you don't remember anything from this whole Lunch and Learn, the main thing I want you to know and understand is that living benefit, regardless if it's Transamerica, regardless if it's Nationwide, regardless of whoever you use, that living benefit is the big part of it, because that way it's not just a death policy, it's a policy that is still in place even when events happen, because you're literally 7 times more likely to get sick before you die. Let me say that again. You're 7 times more likely to get sick before you die. And the thing is, you need a policy where you can tap into it and cover some of those mortgage payments and expenses and things of that nature while you're sick before you die. Um, so and Transamerica has the number one term. It has had the number one term for like last 12 years. And that's the only reason we're using their brochure, because they have some examples and stuff that I want to share. But we don't just do Transamerica, we do Nationwide. They have a living benefit as well. We do a couple other companies. So, I just wanted to kind of share it with you. But mainly they're looking for that term. This is an example of a 30-year term, because most people mortgages like 30 years with a living benefit. All right. We want that living benefit to be beneficial with you if something happens while you're sick, right? Before you die. So but the whole thing is that living benefit is what? Terminal illness, critical illness, chronic illness. That's what it covers. And so it's when you cannot do 2 of the daily 6 activities: bathing, toileting, clothing, you know, those things, when you can't, if you need assistance with those things, you can tap into the policy, use it up to 90% of the what we call the death benefit, the face of the policy, to use towards that. But let me give you some examples, because I like to, so you can see what we're talking about. And I'll also give you a couple of examples of clients that I know that was able to use this, right? And the issuing is 18 to 80, right? It can cover up to $2 million. And it's just, you can do different time periods, 10 years, 15, 20, 25, or 30 years. It's up to you, all right? And let's just look at some examples though. Let's look at how the living benefit works. So this was a chronic illness, right? So we have Sarah here, and Sarah, she buys her first home. Yay, right? Royce, she just sold her the first home, right? Uh, she's paying $29 a month. She did a 30-year term. She got $300,000 face, right? Well, Sarah ended up having an accident at 42, right? She was 35. 7 years later, she had an accident. She has the accident. The policy, she was able to pull out $18,000 each year. And she pulled that out each year, $18,000. But she still had a face. So when she died, she still was going to get $228,000. How much she paid? She paid $3,400. That was a win for Sarah, because that money she was able to pull out during the time until she was able to get back on her feet and start back, doing what she needed to do. That's phenomenal. Like I said, how many car accidents we have? Accidents happens every day, So, and her monthly premium was $28.64 a month. Let's call it 29 bucks. She paid 29 bucks for 7 years. She was able to tap into a policy and able to grab $18,000 at 45 and 46. So she got to pull out almost over $36,000 instantly until she was able to get back on her feet. You need something like that. Like some people, they get a life insurance policy, just a death policy. And when you die, that's all the benefits. Now you need something while you alive, you still getting some benefits. But let's do another scenario, right? Heart attack. How many people in America have heart attacks? I mean, and the funny thing is, I guess it's not that funny, but most heart attacks happen on Sunday before you got to go to work. Most happen on Sunday. And, we got a 40-year-old right here. She had $250,000 life insurance policy. She paying $44 a month. 8 years later, she have a heart attack. She pulled out $134,000. I'm sorry. $134,000. Because the last thing you want to worry about when you have a heart attack is going back to work. Last thing you want to worry about when you have a heart attack is how I'm going to pay this bill, how I'm going to pay this mortgage. You want to be able to say, hey, you know what? I've done the right things. I put some stuff in place. I've been paying this is $45 a month. And bam, now I could pull some money out and I literally could just focus on my health and getting better. Now, this individual used a lot of that money for their medical expenses and things of that nature, which is fine, right? We all know health insurance is not great here in America. Well, the doctors in the actual practice is great, but the health insurance company in terms of paying them is not great. And you have to fight for every dollar and every service, which, hey, it is part of it. Organ transplant. This is a big one I had a classmate of mine that ended up doing one of these policies with me. Um, she did a policy with me. She ended up needing a kidney replaced. She had a $1 million policy, but the thing was her health insurance covered the transplant. But I'm not sure if you guys know a kidney transplant in Miami is $1 million. So she had to cover 20%. Well, 20% of $1 million is $200,000. She didn't have $200,000. She ended up tapping into her policy, used that $200,000 to pay for her kidney transplant, and I was the hero at the class reunion, right? Because you know she needed the kidney, or she had to stay on dialysis. So, in same type of scenario here, guy has $1 million. He was 55, $173 a month, and I'm having to tap into it at 55, 615,000. And let's see, what organ was he's getting? He had an accident, lower life expectancy. He had to do an organ transplant at the hospital. And he should have passed away, but he was able to tap into his policy, get 615,000 to buy a new organ to save his life. You know, that's what I mean. Not just having a death policy, but having something that's gonna say, hey, you know what? I could tap into early. This is a scenario where it's not really for the scope of this lunch and learn, but let's say if you have a terminal illness and you kind of want to celebrate early, or maybe you want to tap in and you want to pay off your house early, right? You just want to pay the house off, and that way your beneficiary could know who is going to. Maybe you pay it off and then you do the title work and have it transfer into who you want it into their name ahead of time. This and the person had 12 months to live, so they was able to get their affairs in order. They had pancreatic cancer, right? And they was able to get their affairs in order. You know, all of these are powerful options and questions and things of that nature. And that's what we always recommend and suggest. The other thing is, a lot of times we have this question, well, how much coverage should I have? I think that's a big one. Like, how much coverage should I have? Should I get term? Should I get perm? Should I get, all these different ones? This is a partner company that we work with, and they have what we call DIME. DIME is an acronym, stands for debt, income, mortgage, education. And so this is a PDF. I have Royce sent out, or we can put one together, whichever one. And what you can do is you can kind of label, hey, how much is my debts roughly, right? How much income I need to replace for how many years, right? How much I have left on my mortgage. And if I have kids and stuff like that, how much education fund, final expense, emergency fund I want to leave. And that should give you a number. And then once you have that number, you can kind of figure out, hey, you know what? And this is kind of like an income replacement grid on how much you would need based on your income to give you that every month. So like if your needs is 5 years and you're putting $36,000 a year to the table, you need about 179,000 as a beneficiary to kick off that $3,000 every month. I hope I ain't confused nobody with that one, but mainly this is kind of, if you do rate of return, this is kind of how much you need to get $3,000 every month for 5 years, in a sense. So let's say the average income in America is 72,000. So if you need to cover income for 5 years, you're gonna need at least 350K, right? If you got to cover income for 10 years, you need about 700K. If you need to cover income for 15 years, you need about $1 million. I mean, to be able to give those family members, that $72,000 a year, $6,000 a month. If you need to cover it for 15 years, you need about $1 million. And that's kind of what we kind of look at and try to figure that out. And once you do that exercise, and God, I'm here. Royce can we can always send you an email. We can set up an appointment and everything, and we can kind of do this exercise together and figure out. Like, you don't have to do this alone. We can figure out how much you kind of need, how much debts you have. Do we have a short-term plan to get rid of the debt? Maybe we have a short-term plan to get rid of the mortgage. Maybe you have this mortgage, but you own another property. Maybe you have a retirement account that can kind of cover some of it. It's a lot of moving pieces when you're doing estate planning, but it's kind of like estate planning, financial plan, all at one, with your biggest asset, which is your home. And a lot of times we talk about homes with the equity in it and everything like that. So just so powerful, so much thing. Do anybody have any questions or anything they just wonder, like, hey, I heard this. We have the new Ivy League. We call it YouTube, Google, Facebook, TikTok, Snapchat. That's the new Ivy League. And a lot of that information that's out there is it tend to be outdated, or people are trying to throw you little stuff to try to sell you something. I would say just stick close to the professionals like a Royce, like me. I seen Terry, just people that's really just have your best interest, just want to educate you. We normally just kind of do these things just kind of just to show love and just to give back to the community. But anybody have any questions or anything for me?
There's a question in the chat. Lynette asks, did this change their tax basis?
Well, so in terms of what? In terms of like,
I'm assuming the income that they're getting from the policy, does it
no,
change
it
tax?
won't change that. It won't change the tax basis, because life insurance, the proceeds of it is tax free. I guess if you now let's say you get $1 million, that's tax free, but then you put the $1 million in an investment, whatever you make from that investment would change your tax basis in a sense, because you have to pay capital gains, but it's capital gains on everything above the million, if that makes sense. So it's, like say for example, you made $1 million, you put $1 million in investment, and then you made $100,000 of interest that year. So from January 2024 to December 2024, you made $100,000 in interest, $8,300 a month. You would pay taxes on the $8,300, not on the $1 million.
Gotcha.
So your tax rate would be 18% on the $100,000,
Gotcha.
or your income tax per se on the $100,000, which would probably be a little bit less if you're depending on your tax filer. And I could get into the weeds with that. I'm also a tax professional, so if anybody need any questions on that, I can help them out on that.
Gotcha. And so just to make sure that we all understand, can you scroll down to the graph again?
Mm-hmm.
So when you gave the example, let's just use the easier one, the 5 years you need at 36 annual income, you need 179,000. So this 179 is paid off when you die, and that should be enough for your family to live for 5 years.
With on $3,000 a month, correct?
Gotcha. Gotcha. Okay. So this is not, your living benefit where you're getting this as income while you're living. This is the death benefit for your family after you pass.
Correct, correct. Yep.
Got it. Okay.
And like I said, we can always, if anybody just need to go over an income grid or figure out how much money they need, because the other part to that is, let's say you had 179,000 in your retirement account. Then what happens is you probably don't need so much of a death benefit because this would kind of be wiped out. That'd be zero because your retirement account will cover that. You just need to cover debts, your mortgage, and if you have kids, you want to do educational and final expenses. That makes sense.
Mm-hmm.
So it's really putting a plan together that's for you. And that's why I say a lot of times you hear that online, a lot of people try to tell you what you should be doing and what you should be investing in or what you should be like doing in the investment side. And they don't realize is that um, financial planning is specialized, it's custom. Everybody financial plan is different. There's no cookie cutter plan for everyone. So that's why I always say work with a professional to put the best plan together for you and not just a generic plan. The one of the biggest generic plans that's out there is the Baby Steps by Dave Ramsey. And this is not an assault on Dave. I mean, I think he has a lot of good points. But that's such a generic plan where that plan doesn't fit everybody, but it's a plan that can fit a group of people generally. And that's great for general planning. But if you see, Dave always trying to push you to the Smart Investor Pro to create a custom plan.
Yeah.
So like just always know and see that and just know like, hey, financial planning is always about customization. You're not going to be able to like there's no real cookie cutter plans out there.
Yeah. Okay. No, that makes total sense. And we do have more questions in the chat. Oriette is asking, is there an age limit for a term life policy, meaning 30 years up to age 80, 90 years old?
Yeah, most policies, once you turn a particular age in terms of get close to that 80, um, it's going to be very difficult for you to get approved for a term because you're 80. Traditionally, the younger the better for if we're talking about a term policy. But it is some final expense and some permanent policies that we could find that go up to 85. Um, so yeah, it will. But in the scope of this lunch and learn, this was about covering your mortgage and covering your home. So in terms, you want to kind of be in your, I would say 60s or younger for this particular scenario and situation. But if somebody needed to find a policy in their 60s, 70s, or even 80s, we find them, we do them. I just did a 82-year-old. It wasn't for the amounts that we were talking earlier. It was only for like 25,000, 50,000. But there is ones that would cover you at 80.
And then cover your home. So like if you were to purchase, you just have to buy enough insurance to cover your home.
Correct.
Got it.
Mm.
Okay. And so I guess this is probably out of the scope. I'm gonna ask it anyway. So in the same example that you gave, I guess that would probably be more so estate planning, where let's say, you have the 5 years, but you want to kind of divvy out the money in certain ways, like to make it stretch. Because obviously, if you pass away, they get a lump sum. But if you wanted to make it stretch, then that would have to be, you would have to put the money in a separate account and then it would have to be divvied out like that.
No, well, it's two ways. One, you can do a trust and then have the trust release money over a period of time, or the life insurance can just pay it out. They call it structure beneficial pay. So you can
Okay.
say, hey, I want this to be paid out in 5 years, 10 years, 20 years, and you could just do structure payout. That's fine too. They have both. So
Oh,
that's actually relatively easy. The trust is a little bit more entwined because you got to get with an attorney, build a trust and stuff like that. But if you already know who your beneficiary is going to be and stuff like that, you can structure the payout however you want. And guys, let me tell you, I've worked with, couples where there was my clients and then they're separated and they got a divorce. And part of the divorce decree is one spouse have to have insurance on the other, or the other one has to be at least a beneficiary. And we can structure it where we'll have the ex-husband as a beneficiary and they get this X amount
Hmm.
required by the courts, and then the other amount goes to the kids, and we can structure it and structure the payout however you need to.
Gotcha.
Yep.
Gotcha. That's good. That's good to know. Because I know
Mm-hmm.
sometimes people worry about like the money lasting as long as it needs to with the beneficiary, depending on how like they are financially ready to manage the money. And so being able to structure those payouts, make sure that, like if you have small kids or something like that, they're covered for a certain period of time. So we have another question. Okay, you answered. Were you answering
Yeah, I
or
just want to answer it. It
okay.
was asking, the question was, guys, if you got the policy at 50, you bought the home at 50, and the term was 30 years, would you be covered all the way up to your 80? And the answer is yes. You'll be covered the full 30 years. Correct.
All right. Do we have any additional questions? There's a lot of information that he shared, and there's a lot more, but obviously for the scope of this training, we'll make sure that it's, something that you guys can understand. And if you have more personalized questions, feel free to reach out to Kenneth. Kenneth, do you have your contact information you can put on the screen?
Sure, I'll throw it up there.
Yep. And then while he's doing that, if feel free to interrupt me if you have any other questions or put them in the chat. I just want to talk really briefly about what's coming up. So a lot of you have been with me throughout the whole summer. We started in June with all of these classes, but we do have, this is the last month of the summer homeownership series, so summer homeownership educational series. And so we kicked this month off with Kenneth, of course, where he just gave us a lot of information on protecting your home with life insurance. But I also wanted to let you guys know we will, next week, we have personal credit and income taxes. So we have our guest expert, Vivian Jackson. She'll be coming in and talk about how to enhance your credit. So if you're looking to purchase a home, that's a very, very good class if you need help with your credit. Also, August 20th, we will have Tim Ryan of Fidelity National Title. He'll come in and kind of talk about the process when it comes to working with the title company. The title company, for those of you who don't know, they're like the intermediary. So they're the ones you give your money to. You go to closing. They're the ones that collect all the money. They do the title searches. So he'll kind of cover that process and what makes them very important to the buying process. And then finally, August 22nd, I'll be covering a home buying 101 class. So I know we do have homeowners, a few homeowners on this call. And so feel free to share if you have any body that you know that is looking to purchase, because these classes would definitely benefit them. Also, feel free to let me know if there are any classes as homeowners that you guys would like me to talk about. I am trying to work on getting a property taxes representative to come and talk about that. That's a huge question that I get every year when I have new homeowners that purchase a house. So I want to get a professional to come on and talk about property taxes. I'm trying to get someone from the Hillsborough County division to come on and give us like the most accurate information about that. And so I am working on that. But if you have any other topics that you're wanting to know or wanting to cover, wanting more information on, I did have one homeowner reach out about maybe purchasing investment properties and then maybe doing Section 8. And so I am working on getting an expert for that. And so definitely let me know if any of that information is what you want to do. Also, if you are a homeowner, there are a lot of changes, not homeowner, if you're a home buyer who hasn't purchased yet, there are some changes that is coming or is happening currently that will affect your home buying process. And so I will be putting together a training for next week to go over that because in working with me, there are some changes that we're going to have to implement. And so in order to continue working together, we're going to have to do some things in order to make sure that we are in compliance. And so be on the lookout for a text message with a link. That training will probably be at night to make sure that we get the most people we can, because it's kind of almost like a mandatory thing if you're purchasing a home, that I get this information to you. But if, do you have anything else to add? I think that's all the announcements I have for
Nah,
today.
that is all. And what I'll do is I'll upload and I can put it in the chat as well. my ebook, and on my
Yes.
ebook on that flyer, it also has um, my contact information if anybody just need to reach out, need to talk. And let me actually put it in here.
And I guess since we have a little bit of time, because while we're here, also if you could share a little bit more about the other services you provide, because I mentioned earlier in the beginning of this, Kenneth, I call him Gita. I keep was trying to restrain myself. Kenneth is Kenneth, he's like my financial guy, and so he does a lot of things. And so if he can kind of share with you, he actually just we just redid my life insurance policy. And so he is the person, but he doesn't just do life insurance, he does investing. But if you can kind of go into that, kind of share what other things, so if they have any other needs, they can come to you.
Definitely, definitely, definitely. So I'm a fully licensed financial advisor. What that means is, for anything, you always want to look for somebody that is what we call a fiduciary financial advisor. Fiduciary is that key word because that person has to do what's in your best interest, whether they get paid or not. And so it's a level of standards that I actually went to achieve. So I can always do what's in the client's best interest. Um, and so with that, I specialize in government employee retirement accounts. If you have one, I know their funds left to right, backwards and forward. TSPs, Florida Retirement System, FRS, 457s, 403Bs, even the 401ks that some of our government actually have. So I actually manage those accounts and I help people to try to get a halfway decent return. Um, we do a good job, but also one of our programs is where we can actually manage and have a professional manager account without any money out of your pocket. So we build the state of Florida, we build the government, we build TSP, we also build your employer. That way, you're not coming out of your pocket to get somebody to have a professional manage and help your money.
Mhm.
Um, but the main thing that I do is just financial education. Our biggest thing is about educating people, letting you know about it. This is our ebook. If you scan this QR code, and also I put this PDF in the chat, it'll take you to the link to be able to download the ebook. We have three versions of it. We have the full version, which will take you about 30 minutes to read. We have the Cliff Notes. It's the short version. It just gets straight to the point. And then we have the too long didn't read version, which just give you a real quick, brief highlight of what we do and how we do it. Um, I have a lot of clients that work with me that are in nursing and that's are school teachers or government employees and things of that nature. So we do protect you with life. That is like our foundation. And what we do is we help our clients to do what we call our 7 money milestones. And so the first one is proper education. So we have to make sure we educate you. And then after that, we just make sure you're protected. And then from there, we just continue to go cross our milestones. If you need to set an appointment, you can call or text. And what we can do, we can find, we'll label it out. I'll get you a calendar link and we can book it and set an appointment. And, the first appointment, we can kind of go over whatever we need to figure out what is it, where you at, how we're going to get you further. And then from there, we just create a financial plan.
Yeah. And he definitely can help you with budgeting as well. So those of you on here looking to purchase a home, um, Kenneth is the one that told us about the high yield savings account, where you can kind of, expedite your savings. And so he is the guy. So definitely feel free to schedule and book your call. I wouldn't bring anyone here that I don't trust and I don't put my own money with. And he's definitely on the same wavelength as me as far as making sure that we educate our clients. It's not just about the money. We'll get paid however we get paid, but our goal is to make sure that you are taken care of and you're doing the best thing that is in your best interest for you and your family. And so I'll do one last call for questions, and if not, I won't hold you hostage. We'll definitely let you guys
Mhm.
go, finish your lunch, continue on with your day. But you will get an email. It will, once I fix the video up, I will send a replay out to everyone that registered. I'll also send out that ebook as part of the email. And then Kenneth, I will get you the emails for everyone that registered. So he can kind of, send you the link as well for the ebook if you didn't get a chance to scan it or you want him to send it to you directly. He can send that out to you as well. Any questions, comments, concerns? Nope, going once, going twice. Well, I want to thank you all for joining us today, for taking the time out of your day to be here, and I will see you hopefully next week. Have a good day. Thank you, Kenneth, for being with us today. You're always amazing.
My pleasure, anytime.
All right, thanks. Bye-bye.